Hi, I'm Kate Stikhina and we are continuing the series of a fresh autumn market recaps. In this review, we will delve into the performance of some major currency pairs. The single European currency remains weaker against its American counterpart. Admittedly, the general trend in all currencies of Europe is downward, given the downbeat macroeconomic statistics signaling the impending recession. Yes, the focus right now is on the news from the United States. Specifically today, experts at the U.S. Department of Labor are gearing up to release an employment report. The forecasts regarding the report's content are notably pessimistic. Even though the unemployment rate is expected to remain at 3.5%, the non-farm payrolls are predicted to reflect the addition of barely 180,000 new jobs. If this forecast proves accurate, it would mean that for 3 consecutive months, fewer than 200,000 new jobs have been generated. Given the rate of population growth in the United States, over 200,000 new jobs should appear every month to uphold the labor market stability. In fact, this is a concerning signal for the US dollar. As often the case ahead of the release of a crucial data, the market tends to move in the direction opposite of expectations. What's particularly surprising in this scenario is the lack of a proportional response to yesterday's inflation data from the Eurozone. Those numbers hold significant importance as well. Seemingly, the dollar is playing the role of a disruptive student and in a class constantly grabbing the attention of others. At the same time, the behavior of the European currencies could be better. They are far from winning the best performer prize. High inflation no longer triggers much reaction from traders. Head of the European Central Bank, Christine Lagarde, has stated that the regulator will persist in raising interest rates. As a result, the inflation data were basically ignored and the euro didn't receive the anticipated support. The euro against the US dollar witnessed a sharp decline following a brief hold above the 1.0900 level. This abrupt drop could be attributed to speculative maneuvers, thereby contributing to the overheating of the euro sell-off positions. Considering the technical oversold signal of the euro and taking into account fundamental analysis, a potential recovery towards the 1.0900 and 1.0950 range remains plausible. However, a breach below the level of 1.0830 might pave the way for a retracement of the quote to a zone where the descending cycle commences, which is approximately around the 1.0775 mark. Mirroring the euro's trajectory, the pound-dollar pair has pivoted toward a descent, potentially driven by the correlation in the pairs. Consequently, the quotation has reached the 1.2650 benchmark. The British currency may weaken further if it holds below 1.2650. Otherwise, the quote will likely revert to the range between 1.2700 and 1.2750. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.